We're taking a look at a $600 call, and it's an earnings preview call structure for 721 monthly regulars. Not only that, we do have the call chart right here of that $600 call that is up and out of the money, and it is a regular. What I would like to show my MMTs is that back on 625, when the call was down around $5, we were buying around 560 area, but they went from $5 and they maintained that value over here at 540 and then went to the peak MMT of 1930, and then this last Friday they gave up their value from a closing perspective the previous day of 1760. So basically what I have here is that $600 call. And I'm going to put alarms on this MMTs. I'll give you the real pricing structure later, because we're going to see how these trade either down and or up going into this Thursday's earnings on Google. Okay, and Independence and 4th of July weekend is out of the way. The markets had a big markdown. Google had a big run up already. And then it has a daily reversal. We'll do the charts for the MMTs. Put on the opening bell tomorrow morning on this particular 721 $600 call, put falls to $10.60 and $8.70. That's falls to. Now that we have set the alarms, that's the alarms. Once we get into the entry processes, we'll do that off video. Once again, this is our MMT market maker in action on a Sunday, going into the earnings and setting this up. There is that $600 call regular. On the flip side, we have a 713, and they report earnings on the 12th, Thursday. Google does. Now, these are a weekly MMT, and as a market maker on weekly, you can see the high was 920 and they marked them down to the low on Friday. They only had 2 days, but they got them from 920 down to that $1.79, and they took them to the woodshed from $8 on that close down to that 179 with the 560 high. MMT, we're going to make a big ass market. Now let me tell you, MMT, because I want you to set alarms, falls to $1.20 on the opening bell and below, and then set me another alarm at, let's say, 80 cents and lower, and then ultimately, Rick Goley, and this is that super weekly up and out of the money volatility, let's get alarms down there around 50 pennies and lower, and then we'll manufacture the prices in a different video. But once again, this is a weekly 713 $600 call. MMT, here we have before us a 721 585 call. Now notice that the premium spread closing at 25.60. The high was 23.50. You only had a $5 range with the low of 18.49. Now MMT set an alarm, falls below 15.80 and set me another one 12.80 and lower on the 585 721 call. You can see that when we were buying calls over here in volatility, the first time they were as low as 8.57. Because they were here on the call chart. Now, on the other date, going into that holiday, they got to as low as 920 here, and then they popped them to the high. How nice, of 27.60, and time to get out. And now they've come from that 27.60 down to these lows of 18.49, closing at 19.80 MMT. So get those alarms set right there, and that's on a regular 585 call, 713. They report on 712. That's the current market. There's that markdown. It's a weekly. Let me show you what the current markdown, and you got, look at here, MMT, $18 on the high and the low is 640. So what are we going to be looking for? If they're going to want to run these calls back up into Thursday, 4 days in a row, this has got a lot of room to go. They were 1665. This side of the market's been marked down. MMT, set me an alarm on a 713 585 call. We'll do the prices, of course, during the live trading day, and we will get on both sides of this trade and come out fatter than big fat cats in an alley. Now, let's take a look at that 640 low, and that's where the markdown from the call. So you're going into the earnings on a weekly level with a markdown position on this side already at 740. Give me an alarm, MMT, falls to 580, put another one at 4.6 and 3.8. But I will tell you, MMT, that you would look for the 5.7 alarm falls to right away, because we're going into the earnings on a weekly level, expiration level, at the closing price of 585. This is at the strike. And that finally they marked the call down. Well, we have to look at getting this side of the transaction. So therefore, I'm going to move on to another one. This is the 585 call, 713 585 weekly call. MMT 713 595 call. MMT 1041 on the close. MMT intraday high was at $7.90, and they marked them down. Finally, they took that away, and the put side went straight up. But let me tell you, MMT, we're going into a high patch in earnings, and the thing about it is the high was 1170 down to 277. They got a mark down in that call. Now set me an alarm. MMT falls below right away. You're going to want to know the minute that this thing falls below 220. Okay? And that's the 595 call, which is $10 up and out of the money. Okay? So basically, we will get the pricing structure as we go through the 4-day pricing controls up to the earnings on Thursday at the closing bell, Thursday the 12th. And because it's a weekly premium and they expire, and these options are going to change considerably toward the end of the week. We just want that short-term alarm. Set me a hook, $1.20, and set me another one there at 60 pennies. Thank you, MMT. You're correct, MMT. You are starting the week in the morning on Monday morning, going into the earnings for 4 days in a row on Thursday. You're starting that the call is deflated zone right now, but remember that the call side of the market was already marked up. So the values of these things, particularly when Google closes at 585 here, 585.98, is that on these weeklies, this is the side that they like to deflate. And then if we run in anticipation, these calls can go right back up and get inflated again. But the thing about it is, the reason why you have to be on both sides, because the market maker is on both sides. Therefore, that's why we're looking at this up and out of the money. Now, that's a 595, and you close at 585, and we already did that. What I will do with the MMT, though, is I will go with the 590 call as well. And I'm going to throw the weekly 590 call in our market minder here, which is the 13th. And I'm going to show the MMT now. And let's get a level 2 and throw it in there so you can see the prices now. So here, let's get the call in here. And that's going to show you clearly what the 590 looks like here in the level 2. $13 close MMT, got marked down $8. Okay. 1020 on the high with the 450 clip on the low, the 590 call. Now, we're going to look at, in the volatility, as a market maker, being on both sides of the market, is exactly what those price levels will be. Now, set an alarm, falls to, on the call side now. Set the lowest alarm to be alerted, anything below 220, and you can set one at 350 as well. And then the 220 mark. And lower, and then we'll start addressing up and out of the money volatility depending on how they open the bell tomorrow with Google. If these calls that are currently marked down and they start wanting to gap them up and Google wants to hold support, of course we're going to have to pay higher prices. And we will have to make this transaction if that's the case. I'm going to move on to another one. And this is weekly structure, trading up into the earnings. Regulate. We have the 7/13/2012 590 put that expires this week. You can clearly see that the low was $5. That was a great entry. And the high, well, It was 11.50 and they close at 9.40 and it's a weekly and it's 2-day price cycle. Notice that they're not totally deflated right now. $5 was a good price, 9.40, so it's 4.40 up off the low MMT. But the thing about it is it closes at 9.40. What I'm going to say is if they gap the name up tomorrow, I want you to start setting alarms for me on this one. If it falls below 5.20, then you'll have one at 670, of course. And then what we're going to do in the very short term before getting entries, you'll set another alarm at 750 on this side of the market. MMT, that's at 590 put, MMT. Here we are with that 585 put at 630 by 670, and that's right at that closing bell strike price. We can take a look on the weekly MMT that the low was $3.70 and the high was 8.5, and guess what the close was? 690. So we know that this 585 put is not deflated because it's not. It's somewhat up here in the inflated area. And so we're going to be watching to see that if they take that premium out of there, then over here, our 585 call is going to start moving right away and we wouldn't get wholesale bids. So we're going to be watching how that 585 put, if we gap down, they're going to gap this back up in value and they're going to gap down our calls over there. And then we're going to figure out how to get the entries. Now, I want an alarm also at 360. Just put an alarm 360 or lower and 220 and lower. That's the lowest end over here. Because that would mean that then going into the earnings on Thursday, that this side going into the earnings would be totally deflated instead of inflated. So rather Google wants to trade higher going into the report before they drop the bomb, or they want to sell it off going into the report and then pop goes the weasel upside. It doesn't matter. One of them is going to happen. So set those alarms there. We have a 575 put. It's a regular monthly 721, and I've got a 575 put chart. Now, this was the extreme blow-off bottom where we had some people transacting these, and it's on a monthly level. But I would like to inform my MMT that the 575, that's $10 below the market of 585.98 close on Google. What I will say, depending on what we have happening in the marketplace, we've got two entries to do. One is the exit to sell, and the other is an entry to get back into the marketplace. If they were to continue to run it up into the earnings and take any more premium out of here, we would have to be the buyer down here, because that means that this would be very extremely deflated here going into the report, and that the call side of the monthly side is going to be up there more inflated. There will be a market maker adjustment in this time frame. No matter what, the markdown would have to be bought. Set alarms just to have it. Now they close at 1460, up 420 on the day. The low was 1120. Set me an alarm, falls to 1180 and lower, 980 and lower. Those two right there. Okay. In the near term, if this comes to 1280, I need to know on the alarm, because depending on what Google does, these are just coming off of their first daily movement from being extremely deflated. Now, you got to remember, they were up here at $30, okay? Okay? On this freaking call chart, put chart. 575 put, regular, 721. So, if Google was to sell down, then they would reinflate these back up in value, and we would exit, and we would look at exits. It just depends. They could get as high as $22.50 from here. If Google sells down into the earnings, that's when we would be executing out and buying the other side of the market, the call side. So we're going to deal with the regular 721. MMT, 721 monthly, $500 put, 53 pennies, 60 pennies. You can see where these below the market. Now listen, if Google was to give a bad report and drop horribly, at least if we're stealing the premiums down here at the all-time lows, that's why we can afford to be here. Then I'll show you why, MMT. It's possible that Google could have a huge miss and go down to the lower price targets. But, let's take a look at where the contracts were. They were up here at $6.10. That wasn't that far ago, MMT. And I remember people were trading them. That was on 6/14 of 2012 when they were at that price level. So basically what I'm going to say in the $500 put, they close at 95 cents. They were low at 53. It's a good way to have a monthly expiration, very, very cheap, with heavier volume, because I can tell you, these pop back up to $60 and you have 200 contracts down here at the low. You got a couple hundred contracts for $12,000 worth of risk. But I can tell you the upside could be well over $100,000 in one print. That is if Google was to sell from 585 and, they drop it down on the earnings this week when it reports. I'm going to show another one to the MMT, and another way of being below the market on a regular 480 put below the market, that these are cheap at 27 cents and 37. But one of the things that we would look at is set alarms on this MMT at 20 cents and set one alarm at 15 cents, 20 cents and 15 cents, falls due. Because if Google was to drop in a weekly period of trading, if they really miss and guided the quarter down, well, Google could sell down to $510. These never ever have to get in the money to make money. This is the cheapest side of the market to be on that potential upside. Let me do it. Here's that 500 put, 721. And once again, I already showed the chart, but I'll be happy to show the put chart. It's at its all-time lows, and like I just said, I'm going to give alarms. Falls to 50 cents, 35 cents, and 20 cents. If they were to take the premium out and we get closer, it's a monthly. They report this coming Thursday. Sometimes, and a lot of times, not in all cases though, but in a lot of cases, if there's a big miss in Google, and these are down here. I watched one time where I got one. It was like, I don't know, around 30 cents. And on the opening bell, it was like $13.50. It can happen on a big miss in the earnings. And number one, it's a 721. So I think adding to a potential big drop at these lower penny levels, all-time lows of the contract, you're not buying up here. Hell, they were just up here at 610 on 514 now. It's not like you were paying up here at 275 or so up here, because you weren't paying the 275 price. But now we can add to this position to be in that side of the volatile part of the market, based on the big bellwether this Thursday. So we have some monthlies in there that we can do, and then we'll be doing our intraday trades. Remember, in the short term, if they trade Google up, we go with the calls on the weekly, and we take our money and we buy the puts, and we'll just dance around it as we go into the Thursday's earnings report. This is a major call and put structure earnings preview that we have done. And we've used call charts. We've used the call charts, the 585 weekly, the 590 call weekly, up and out of the money. Their premiums are going to change. Remember, this weekly expiration, Google reports Thursday night. These will expire the following day on Friday. I will do a complete chart for the delta upside and the delta downside, so that when the entries are made, you'll know clearly, beyond a reasonable doubt, which way the exits will happen on Google.